Hey TikTok, Jim Malone here, coming to you live on TikTok, also on Facebook. I'm also on YouTube at DallasTradingFloor.com, at www.facebook, www.youtube.com/DallasTradingFloor. I'm on Periscope, pscp.tv/DallasTradingFloor. And I'm on Twitch at twitch.tv/DallasTradingFloor. Well, let's get into it. Looks like we have rebounded. The market rebounded today somewhat. I was stopped out of a position. The position that I had in MFI, it did stop out, and but it seems like it has bounced. It went down more than 7%. And of course, as you all know, I always set a stop loss at 7% down. So I was stopped out of my position at MFI today. Kind of not the greatest, but you take your bruises as you roll with them. I was able to buy back my option on Tesla for basically 79 cents, which is amazing because I was able to get $19.25 for the option, which times 100 is about $1,900. And I was able to buy it back for 75 cents, making the difference. So this is kind of nice. And then I sold another option, 1,000 option, and I sold that out a week. It's basically going to be expiring on July 2nd. So there you go. It's definitely interesting times in that, we are seeing the market rebound. So really what happened yesterday was essentially a bounce, it was essentially a distribution day. So I want to show you the market direction here, and that's a very important thing. You always want to look at that first because that's going to tell you kind of where to go, what the market is doing. And as you can see, the S&P 500 is down a little bit, but it's still above that 3,000 number, which is pretty important. The Dow Jones is down, but just only slightly. And most importantly, it looks like the NASDAQ is at 99.02 and the 10,000 is, pretty much the all-time high. So, it's still pretty good out there. Even though, every time the stock market drops, I mean, it's not the end of the world. So, it can be, very, very good. So let's see, I have how to use fundamentals in trading. Well, basically the fundamentals that I use, there's two camps of, there's basically two ways to trade, and that is using fundamentals and technicals, or you can use a mixture of both. And I recommend the mixture of both. And the best way to do that, the best overall strategy that's really laid out, and the one that I learned, and I think is still the best, and most of the top traders, by the way, in the world use this, is the CAN-SLIM method. And, I'm not a paid advertiser for William O'Neill, but William O'Neill probably is the one that put it all together. And he wrote a book called How to Make Money in Stocks, A Winning System, Good Times or Bad. You should definitely read it. It will make you money. I'm just telling you, it will make you money. So, and that's the CAN-SLIM method. I don't want to go all totally into the CAN-SLIM method. It's really covered in the book. But this is the way you can combine both fundamental analysis with technical analysis. The fundamental analysis, of course, is, where's the market going? What kind of companies, what kind of levels that are in. Whenever I'm on the show and I'm talking about a composite rating, the fundamentals are in there. Is it in a good industry? Are the revenues increasing? How does the balance sheet look like? What's the debt load? Those kind of things. Now, on the technical side, I follow the trend. So I'm looking to see where the funds are buying. I want to be like the little minnow that follows along after that big whale that's eating all the fish. And I just want to get the little crumbs that are left. That's my technical analysis. That's how I do it. And I'm looking for the right chart patterns. There's about 7 chart patterns that'll pay you money almost every time. Not every time, but good likelihood of that. And I go over those as well. So that's fundamental and technical. So if you really want to learn fundamental analysis, I really recommend taking a look at the book by William O'Neill. It's How to Make Money in Stocks, a winning system for a winning system, good times or bad. And it is absolute classic in the industry. Now, it's true. Everybody says, well, to Warren Buffett, well, what do you read? He wrote Graham's book, which is great on fundamental analysis. But, we live in an age of programmatic trading. And so you do have to know a little bit about technicals. Technicals are going to help you avoid being stuck in a position that is going to continue losing money. That's the reason why I always place a stop loss at 7% down. That's just a technical rule. It typically works. And so I try to play the percentages. I'm sort of an 80-20 guy. I'm always looking to, win 80% of the time. You can't win 100% of the time, but I'm looking to win 80% of the time. So let me go through the slides here that I have prepared today. Of course, this is the market direction that we're talking about. So it definitely has swung back a little bit from yesterday. Still a little bit, of jitters here. This is the spider, and it looks like the spider is holding above the 300 level. It was 305 today, so it is down a little bit. It's moved down a little bit, but just only slightly. What it's going to do is it's coming back to this 50-day moving average line. That's this red line here that you can see. Now, hopefully, maybe I can see if I can. Yeah, there we go. I'll show you with the pointer because it makes it a little bit easier to see it. But this is that red line here. That's your 50-day moving average. It's well above the 50-day moving average, so that's a good thing. Also, the relative strength on the Invesco QQQ Trust is above. Let's see, this is 85. So here's what this tells you in a chart. The stocks that are represented in this ETF, the QQQ, which corresponds to the NASDAQ 100, the top 100 stocks in the NASDAQ, that is outperforming all 85% of the market. So this is why you want to be in the NASDAQ stocks, because these are outperforming the market. So give you other next slide is the spider. This is a wider this shows a wider slice on it. This is basically the S&P 500. These are the S&P companies, basically the 500 largest companies that are listed on pretty much all the exchanges, either the New York Stock Exchange or the NASDAQ or all over. And as you can see on this one, these NASDAQ stocks, it's only a 50 relative strength. Why? Because this is a broader index, and the spiders represent 50% approximately of the market. Now, if I was looking at the Russell 2000, then it would be more like the relative strength line would be much lower than that because it would represent more of the market. So that you look at that relative strength line to see with that index how much of the market is being represented and what is trading. This is the reason I trade stocks that typically are in the NASDAQ 100, because they outperform the market. They are the top 15% of the market based on the relative strength line. Okay, so next one here is the diamond. Now, what is the diamond? Well, this is another ETF, and this ETF covers the Dow Jones 30. Now, when you listen to the news, they say, well, the Dow was up, the Dow was down, such and so. What this means is that this is only 30 stocks in this, and typically these are very large stocks. Stocks like Boeing, are in there. But as of late, the Dow Jones hasn't really covered the market, but it's still what's reported by all the news sources. So they say the Dow's up, the Dow's down. Well, it doesn't really mean anything. You want to look at the S&P 500 because it's a much broader index and it covers much more of the market. And you really want to trade only the NASDAQ 100 because that's where the market is going. And it's been going that way for about the last 10 years. So here's a chart of volatility. I want to show you this volatility because it gives you an idea of kind of what's happening in the market. As you can see, the volatility up until the February time frame was very, very low. And remember, when the stock market went down, the volatility went up. This corresponds to what they call the VIX. you'll hear that a lot. A lot of the news sources will say, the VIX went up, the VIX went down, whatever. Basically, what they're telling you is that the volatility went up and it spiked. The spike on the volatility was right at March 23rd. So that it's been reduced ever since, and then it ticked up a little bit, but it's still coming back to this 50-day moving average. So it's spiked up a little bit last week, but it's been coming down, and it's come down significantly, but it's still spiking up, still a little bit from its lows, but the volatility is still good. Why is that important? Well, the reason that's so important to look at that volatility is that's going to tell you how much swing is going to be baked into the price on the average in the stock. Obviously, the more volatility, the larger the swings that are going to be in the price, and the less volatility, the lower the swings are going to be in the price. And this is how you can kind of judge, when it's the right time to get into the stock. Also on the chart patterns as well, but the volatility is extremely important. Now, I want to show you two stocks that are in the Dow that are doing horribly. This is why I don't typically trade Dow stocks. There's two stocks. According to this headline, the Dow Jones reverses higher. The Dow Jones reverses higher. Well, the Dow Jones went up, but these other ones went down. The stock market pullback continues. Well, why? Boeing and Disney tumbled, but guess what? The stocks in the NASDAQ didn't. So there's a bifurcation in the market. The market is favoring the big cap tech stocks, and I just want to kind of show you that graphically. Boeing is down $3.95 today, and Walt Disney is down. Now I haven't shorted Walt Disney, but I was shorting Walt Disney when the volatility was spiking up and then moving down. I was shorting Walt Disney because I knew that it probably would not do well when it reopened. The reason Walt Disney is having a problem is even though they have a lot of really great content that they can put out there on movies and that kind of thing, they get the bulk of the revenue from theme parks and cruise lines, and they're just not going to do well, and because they have a lot of debt, so they're down significantly. Now, 110 is still a pretty good price for them, but really, the people that bought that thinking it was going to come back to where it was, I don't think it is. The same is true with Boeing. Boeing a year ago was a stock that was well over $300, and see, this is the reason I don't believe, at least going forward right now, it's a really, really good bet. A lot of people a lot of people are going to be in the stock because it is the name and everybody knows it. It's the largest exporter, but I think things are about ready to change. There's a changing of the guard happening, and I don't know if you know that. Tesla is now the largest, by valuation, the largest automobile company in the world. It just exceeded last month the total value of Toyota. So it's now the biggest in the world. So the deck chairs have been rearranged. It's not GM and the other companies like that anymore that are going to call the shots in the future. The future is going to move away from companies that you've known all your life and move to another area. Tesla is going to be a beneficiary. GM, Ford, Fiat Chrysler, Mercedes, they're all going to be losers probably in this new future. So that's the reason why you have to look at those trends. Every once in a while, you have these sea changes, and with this COVID-19, it's just sped up the movement of things that people do physically to what they do over the internet. That's why cloud computing and internet-related companies are going through the roof, and old line companies like the department stores, unfortunately, are doing very poorly. So this is the reason why I can't typically recommend for any long-term trade that you move into some of those quote-unquote bargain stocks, because they're not really that bargain. So anyways, I feel like Facebook is underperforming. What do you think of having my position to get into Pinterest? Here's the thing about that. Let's take a look at both of those companies, and I want I want to kind of put those up on the screen for you here really quick. So let me see if I can get you. Let's look at both of those stock charts side by side. All right. First of all, I'm going to look at Facebook. All right. Now, Facebook may be a little bit more pokey, but I do believe, and yeah, it's up. It's up. I do believe, and I know it's expensive, but I like Facebook a lot, even though it seems like it's sort of pokey. So let me kind of put the Facebook chart up there. All right. Here's what I see in the Facebook chart. Currently, I'm not in Facebook, but I have been in and out of Facebook basically all this year, and I've done quite well on Facebook. As you can see, this is the downturn, of course. I'm just trying to reorient it. This is the downturn. This is March 23rd here. This is when we hit the bottom of the market. It's been climbing ever since. Now, as you can see, this is a call to handle. Basically, it's moving up and down, up and down. It's trying to find a level. This is a pivot point. This is potentially going to pivot higher, I believe, on Facebook. So you just have to be patient. The problem, I don't think Facebook is underperforming relative. Now, it's not a shooting star like Pinterest. I agree with you. Pinterest is a relatively new stock, and it has a little bit different characteristics. But I think that it's not a bad idea to have your position. I think that's not necessarily a bad idea, especially if you have profits. But look at this chart, and the reason I say that I believe that Facebook is going higher. Why? Because the 50-day moving average, which is this red line, has crossed the 200-day moving average. This is a very bullish signal. Okay, Facebook becomes viable when this happens. This means that this is like a snake coiling up, getting ready to move and strike and move higher. Also, there's been very good blue bar action down on the volume, which means that the volume is very strong in Facebook. So I wouldn't necessarily go out of your Facebook position, but let me see if I can find something for Pinterest. I think is it P-I-N-T? I can't remember what. Yeah, Pinterest. I don't know all the symbols offhand. I have to sometimes see. I'm 22. Okay, well, here's the thing about Pinterest. Yeah, if you look at the chart today, let's take a kind of a gander here at the chart. Let me see if I can get my ugly mug there. And basically what you have here is this is also a very good chart. It's not as it's not as strong. This is prior. This is going to be prior to the breakout. It's the Facebook chart is a stronger chart because of the way you saw that cross, this 50-day moving average. Now this is getting very close to, if this crosses this 50-day moving average, crosses the 200-day moving average, it's likely to go higher. That's a very bullish thing. It hasn't done that yet. As you can see, it's backed off a little bit on the price. What I think is going to happen with this action, this chart action, is you're going to see Pinterest move a little bit lower, probably down to, potentially down as far as 21, which would be support at the 200-day moving average. I think that's possibly likely to happen. So if I'm looking about a week to 2 weeks in the future, I'm really looking at possibly having, and I know this is not the answer that you want, but I'm looking at Facebook being stronger than Pinterest. But here's the thing about Pinterest. It's still not a bad chart. I don't like its direction, though. It goes from high to low. I don't like that. Again, let me show you the Facebook chart. It goes from low to high. And you want a chart that's trending low to high. Why? Because that gives you a better opportunity. You see, Facebook is making higher highs. That's very, very important. And so I do believe this Facebook chart is a stronger chart than Pinterest. Not that Pinterest is a bad stock. At $22, if you can get a double on that, it is tremendous. But in terms of actual raw strength in the chart, in the fundamentals, Facebook by a country mile. It's just a better chart. And I typically like to buy the best charts that I can afford. All right, so Can you accept a call for Nike? Okay, I haven't been in Nike, but Nike is a very strong player, as everyone knows, because it is, they have just tremendous brand loyalty, and it's a great stock. It's much better than Adidas or any of the other companies, or Under Armour for that matter. It's just more quality when it comes to when it comes to it. But let me take a look. I'm going to look out and see what the most actives are for Nike. Nike, I believe is the no. Nike is it? I'm sorry, I didn't get Mike. Was it Ni? Is it Nike? Is that some? I don't. You know what? I don't know the symbol is for Nike. NKE, I think it's NKE. See if that's right. Yeah, I'm sorry, NKE. NKE. It's a three-letter one. Okay, here we go. And I'm going to look out at the July, and I like to look out about a month to see which options are the best. So let me just switch over here to the chart so that we can take a look at it and see if that makes sense. Okay, so here we go with the option change for Nike. I'm going to look about. I want to look. I want to look fairly far out. So, well, I want to look about 4 weeks out because that's going to give us the tell on what the value of that, of what that stock is going to be in 4 weeks. Okay, so here we go. Which ones do I like? You know what? I really like I actually like this 191 strike on the July 31st contract. I think that's a good one. But let me just look at the most actives. This is a way I can kind of judge as who's buying what. That would give you that offhand. But yeah, okay, it's the 130. Okay, no, it's okay. Let's see if I can give you the July. It looks as if the July 17. It's a put. Yeah. These are really cheap ones. June. Let's see if I can get a better read than that. Go back here to see which one I want here. All right, those are the Junes. Let's look at the July contract. There we go. Oops, going all over the place. Here, switch back to here. While I get the right one. All right, so that's the July. Let's look at the end of July for the contract. So it should give me my internet connection again. Oh, there we go. 31st. I would sell the July 31st 102 if I was selling it. Are you selling or buying? What do you suggest to call? Okay. Here's what I do. I think that Nike looks like it's going higher, and so I think that a sort of a mildly bullish strategy would be to buy 100 shares of Nike and sell the June 31st call for 478. That's probably the one I would sell, based on the most actives. Let me just see if I can give a. Yeah, there we go. It's most active call. Okay. Okay, it doesn't look like this. It looks like the 17th is the most active. It looks like you want to go out further, but I would rest him in the 101 call. That's probably where I would do it. So that's just for me. Okay, so today, Nike has earnings. Okay, here's the thing about earnings. I didn't realize that Nike has earnings. Don't buy the stock when it's going to go to earnings unless you do a bull call spread or something like that, because you're risking it will go lower. So if you're in the stock right now, I think you might want to sell it before the earnings come out. Yeah, I think you definitely do. You want to sell it before the earnings come out. So if you own the shares, if you own the physical shares right now, I think what you want to do is sell those shares and wait for them to have earnings and then buy them on the other side. Now, if you have a call, if you think that, here's the problem with buying the call. What you can do to make money on this one is to buy the buy the 100 buy the 100 call and sell the 100 call and buy the 101 call, the 102 call. You could do a straddle on this one, but if you have the shares right now, I would not hold them through earnings. It's just too risky. You're better off to just sell it, wait for the earnings to come out, and then buy it on the other side. That's a good way to play it sometimes. All right. Well, thanks, Ben. Okay, so you're going to buy. Okay, great. I appreciate that's excellent. Okay, so now let's see what ones people that are on TikTok. Thanks for bearing with me. All right, so will the market crash again? The market didn't crash. I just want to tell everyone out there, the market didn't crash. The market is. Here's the thing: if the market goes up about 6 to 7 days, typically it will readjust. And many times, the people that have made money during this time, especially the funds, will sell, and that's called a distribution day. And there's some other technical things that will tell you that it's a distribution day, but that's a distribution day, and those happen, and you just have to be ready for those. Will the market crash like it did on March 23rd again? You never can tell, but right now, the direction of the market, and this is why whenever you see my show, and by the way, I'm on YouTube at Dallas Trading, youtube.com/DallasTradingFloor, Periscope, pscp.tv/Dallas Trading Floor. This is why I always show this first slide here, and I just want to kind of show it to you once more, because this is the first thing I do whenever I get in every day is I look to see what is the market direction. Now you think that would be so easy. Well, it's sort of like flying a plane. Sometimes it's raining and you're flying the plane and you can't use visual photos. So it may feel like it's not going, it may feel like it's going down, but it's really not. So this is why I depend on looking at the market direction, and the market direction is confirmed uptrend. It still is a confirmed uptrend. So this is not a time to be short any of the stocks, because your likelihood of success is greatly diminished if you're shorting stocks in an upward trending market. You typically will only win about 20% of the time if you do that. If it's in a downtrend though, shorting, you're going to win about 80% of the time. So that's what I like to do. I like to play the odds. So the first thing I do is I look at that market direction and see where it's going. That's very, very important for me. Okay, so let's go back. Okay. So you're buying. Okay, great. Excellent. All right, so let's see. Okay, this is the question here is a call or a put. Okay, now here's the thing about buying a call or selling a put. If you are bearish on a stock, meaning that you think that in the future the stock is going to go down, then you are typically going to be buying a put, okay? If you are mildly bullish, you might want to buy a call. So if you think that Nike is going to go up, you probably want to buy a call. Now, here's the thing about buying a call. I don't recommend it, because typically at least 70% of the time you're going to lose on this. But this is why I'm typically a seller of calls. But if you do want to buy the call, don't buy the call for expiration within less than about 3 months. Okay, don't buy the Julys, don't buy the Septembers, because that's going to give you more time to be right. So that's just my opinion. And if you think that Nike from this earnings forward is going to do better, if they're going to have accelerating earnings, and that's going to depend on their earnings call today. But if you do, then you want to be, if you're going to buy a call, then you want to be buying a call, but don't have an expiration that's very, very tight. I typically like to sell expirations that are a week or 2 weeks. Why? Because I want that to expire worthless and keep the money. But if you are buying a call, you want more time. So that's just my take on it. All right. So is 7% SL percent intraday or the close price? What happens if the if the call we sold? Do we buy it back? Well, here's the thing about a call: you have the right to buy or sell it on up to the time of expiration. And basically, what happens is that as you get closer to the expiration, the time value or the theta value diminishes. Okay, so this is why I like to sell calls, and as it comes closer to the expiration date, I become more and more of the of that value goes into my account. So if you're buying a call, though, on the other hand, it's the opposite. As the time ticks off, the value of that option goes down because there's less time. So just wanted to bring that forward. All right, so let's take a look at Dexcom. That is a good one, I believe. If it's the stock I think it is, just take a quick look over there at Dexcom, DXCM. So I'm going to put that up as well. So we'll show that. Let's see, DXCM. All right. And yeah, Dexcom. This is a good stock. Yeah, look at that, $3 up. Nice. This is quality. Yeah, I mean, here's the thing. This is a very good stock, and this is not a bad chart. It's going to bounce off of this 50-day moving average. You can see it's moved down to this. This is an extremely strong chart, and it's a very good call that you've made here, because here's the thing. It's better to buy fewer shares of a better company that's moving in the right pattern than it is to buy more shares of a worse company that's in a wrong pattern. And right now, Dexcom has a super pattern. It's got a 97 relative strength. That means that it's outproducing all but 3% of the market. So that's excellent. As you can see, this is the 50-day moving average, and it's moving right up this average. So what's going to happen is the stock is probably going to come down. It's going to bounce, and it did today. It bounced, and it's going to come back up. Probably, you always want to buy a stock when it's on the uptick, meaning it's bouncing up. It's kind of like gravity. You want to sort of make sure that you sell when it's on an uptick. And let's see. I believe this is on an uptick. I believe this has. No, it's Nikola, sorry. Yeah, Dexcom. Yeah, this is just a great stock. It's only up 0.9%, but because it's a $397 stock, that's a significant amount. It's $3.56. It's number one in this group. Let's just look at the other aspects of this to kind of get an idea. It's medical equipment. This is in the 23rd group. There's 197 different industry groups, and this is ranked number 23, so it's extremely good. This is definitely a buy. It's just the question is how many can you afford, because it's kind of an expensive stock, but this is more than likely this is going to go higher. You never can tell, but this chart looks very good, and it looks like a winner to me, anyways. Okay, so let's see. Okay, where the stock might run back up. I think it will. This may run up. You might get a nice bounce on that. Yesterday was a distribution day. A lot of people took some of their chips off the table, and as you can see, I think it's bouncing. I think it'll bounce a little bit more tomorrow, but you never can tell. I do think that this one is going higher, Dexcom, and it's something that you might want to, at least watch list and possibly look at. So it's a good stock. All right. Will the market crash again? Okay. Well, it will. Should you always buy cup with handles? Well, no, not necessarily, because there's other very good chart patterns. I just happen to like cup with handle because cup with handle tends to be one of the most auspicious of all the chart patterns. It tends to show that the stock is moving higher. There's another one that I like too. It's called 3 weeks tight. It's about a 3-week period where it goes up and down, kind of like a W pattern. But it goes up and it goes down, it goes up and it goes down in about a 3-week period. It's called the 3-week tight, and that's also an extremely good pattern. There's another one called just a cup without handle, and that can be as good as two. But typically, the 3-week tight and the cup with handle typically have the best likelihood of moving up. So those are two that I really, really like. There's 7 chart patterns basically. All right, that show upward movement. Do you wish you could? Wish we could see your screen. I wish we could too. Here's the thing, and I just want to talk to everybody out there. I still haven't figured out how to put the video feed on TikTok. I would love to do it because I'm using it on. I don't know if you could switch over to YouTube or Periscope, but if you can, you'll see what I'm talking about because I have the charts up on there. So if you want to go over to Periscope, it's super easy. pscp.tv/Dallas Trading Floor. All right. Let's see. Looks like we never retested. I agree with you. This is a very, very, that's a good, astute question. The retest on the floor, and what do I mean by retest? Well, typically stocks don't, indexes don't go up or down in a straight line. What they do is that they come up and they kind of go down and then they move in one general direction. What I'm gonna do on the screen here is I'm going to show you a picture of the spider, which is the S&P 500. It's a very broad index, and it's definitely the one that I look to when I'm trying to figure out kind of what the direction is going to be. And you're right, we haven't retested the bottom. In order to retest the bottom, we would have to come way back down here to where the spider was on March 23rd at 218. It just touched 218 and then boom, it moved back up. So, we have a way to go. What I think is going to happen and this is really because of the liquidity. Normally, if the Federal Reserve had not injected all the liquidity into the market, probably, and this is all probable, it probably would have retested earlier. We've basically bought a little bit of time. It just happens that there's an election coming, and it's always good to be investing in an election year because it's amazing how election years typically can be very good for the stock market. It's funny how that works, but sometimes it works that way. And so I do think that, I don't think they're going to let the market fall. I think that, they're going to do whatever they can to make sure that it's on an upward trend as we go into the election. So I don't know if we're going to retest at least until after the election, but we probably will. We probably will retest. It's just a question of when. That's my thought on it. But we haven't retested yet on this current downtick. All right, so AKAM. Let me take a look at this one on the screen. And for everybody there that's on TikTok, I'm basically showing these charts, but unfortunately I can't run it on TikTok at the same time. I can't chew gum. I can't walk and chew gum at the same time. That's kind of what it comes down to. So, but I do have it up on Periscope, pscp.tv/Dallas Trading Floor. So you can see it there. So let me show you this chart and it's available, of course, on Periscope. This stock is Akamai, and Akamai is a cloud king, and I like Akamai. It's very strong. Here's the thing about Akamai. I wouldn't be buying it right at this moment because it's finding strength at the 50-day moving average. Now, why do stocks trade like this? Well, one of the reasons that they trade like this is many of the stocks out there, most of the funds use algorithmic trading, and what they do is that they will buy or sell depending on how the stock is performing relative to an index. So that's why technical analysis, looking at charts, is so important, because you can kind of figure out what the algorithms are going to do and cause the movement in the market. And at least with this chart, with the Akamai chart, it is basically a situation where it's hugging this 50-day moving average. So it's basically just right on this line. There's a lot of programming trading going on. You can just tell it by this chart. Before I want to buy this chart, the buy level on this chart for me is going to be if it closes above about 104, 105. If it shows strength up to 104, 105, then I'm possibly a buyer. This is an excellent company. It's in the right sector. It's got a high relative strength rating. It's not the top rated in its group. Audio Codes is, but this is a big group. This is kind of a general grab bag group. This is Computer Software Enterprise. There's a lot of people in this, like Oracle, and there's a lot of good companies in it. It's also the number one group. So I have no problem with this company. The interesting thing, I wouldn't also here's just a word of caution. If you're in the stock, great. You might, because it's moving up, you might want to sell it right before earnings, which is the 30th of July. But we got some time. Here's the thing. I don't like to hold stocks like this through earnings because they can reverse on you, and all that nice gain that you made can be reversed. So one of the great strategies that I really like to do is buy a really strong stock like this that has a strong stock, that has a strong pattern, especially if there are more people coming into the stock, and then hold it until right before their earnings, sell it, see what the earnings does, and then possibly buy it back after earnings. And the reason I do that is because that way you can get many of the gain. There's an old adage, and it's really true, and that is, buy on rumor, sell on news. And basically everything up to the earnings is rumor. The news is the earnings. So that's the reason that you do it that way. And if you do that, it gives you a likelihood of picking up that nice gain that is anticipated in the stock. All right, so let's see. Thanks so much. Oh, hey man, thank you very, very much, Abby. I appreciate that comment. That's really nice of you to say that. By the way, everybody out there, I do stock alerts, and you kind of see what I'm kind of spy in on what I'm doing. I'll show you exactly my holdings today. Just here in a few minutes, and it's just free, and I do this. This helps me makes me a better trader, but also maybe you can benefit some other people out there too. I was very fortunate many years ago to learn some of this trading strategy from a gentleman who basically just sat me down and said, "Here, here's the chart. Here's the QQQ. Here's how you do it." And it started me on my journey, and I'm appreciative, and maybe I can pay forward some of the great things that I learned from this man and I've picked up over the years. So if you want to get in on those free trading alerts, just go to my website. It's www.dallastradingfloor.com, and then just sign up, and then I'll get it right out to you. Just subscribe. And if you're on TikTok, the chart, it's really easy. Just go to my profile. At JK Malone on TikTok, and then just hit the link, and it'll take you right to the sign up page, and I'll get it right out to you. So I appreciate that very much. All right, so Akamai, thoughts, please. Okay, I think Akamai. It depends on whether you're in it or not. I think it's a quality stock. I think you're on the right track. I would look to buying this and holding it till earnings and then selling it. That would be my viewpoint. Hey, Arnold, great to talk to you again. Oh, your thoughts on Nike? Okay, kind of give a little bit of thoughts. If I can, let me take some other questions from TikTok. I'll get right back to the Nike because I think it's a really good question. All right, so looks like a retest of the bottom. Okay. All right. So what doing is the best to pick a price that's close? Yes, absolutely. Absolutely. This is a very, very good. Here's the option trade that I love to make, and I make it over and over again. It just rinse and repeat. It makes money for me. It's a cash flow strategy. And that is, if I find a stock that is not going to go through earnings and has a very good chart pattern, like a cup and handle, 3-week tight, cup without handle. There's several other ones that are very auspicious. I will typically buy 100 shares of that stock, and then I will sell a call as close as I can. Now, some of the stocks have these weekly options, so I can sell an option to the end of the week, and I do that to lessen my risk and also pick up money. For instance, with Tesla, this week. I bought it, and I bought it a little bit high. I bought it at 9.97, but I immediately sold a 10-20 call for almost $20. So because Tesla went down yesterday, the value of that option went down. Well, I bought that option back for 79 cents, and I sold another option, not for Friday, but for the next Friday, and I got $1,800 for that. So that's a way that you could generate income until you wait till the stock that you know that is good, that you know it's going to go up, but you don't know exactly when. So that's one of my favorite strategies is to find a stock that is in a good chart pattern, buy that stock, buy 100 shares of it, and then sell a call option very close to what I paid for it. And then that premium, I will get that premium regardless. If at the end of the time, a week or two, it's trading below the price that I paid for it, well, I still keep the option premium. If it trades above that, well, great. I still keep the option premium. Plus, I get a little bit of bonus for selling the stock at just a little bit higher price. So I typically like, at least when I'm trading, I like to sell options, to sell call options very close to the strike price. Now, if I'm going to buy an option, I want to buy that above the strike price typically, and I want to buy it out. I don't want to sell it. It's going to expire in a week or a month. I want typically 3 months to be right. So it's different. It depends on whether or not you're selling or you're buying the call. If you're selling the call, sell the ones close in. If you're buying the call, sell it out a little bit further, and that gives you some good ways to make money 70% of the time. So thoughts on SHLL? And that's a question from TikTok. So let's look at SHLL, and I should be able to give you. Is that Shell Oil? I don't know. Good question. Let's see if I can get a chart on that. SHLL, is that right? SHLL? That? Okay. Okay, this is an acquisition. Okay, this is okay. I know that people are interested in these things, but here's the problem. Here's why I don't really like to recommend or buy any of these stocks like this. Let me just show you what this is. This is in the group is called the Finance-Blank Check Group. That means that they're building a pool of money that they then will go use to acquire another company. It's called a blind pool. Now, the problem with these I don't want to invest in anything that I don't know what it is. And now it's true, it's gone way up, and boom, look at that. It's trading at 17.35, but I don't even know what they own. So it's sort of like buying one of these is kind of like being on the Price is Right and looking at the three doors, and you don't know what's behind door number 1, door number 2, or number 3. Now, one of those doors has something that's good, but one of them has a donkey that you don't want. And so I wouldn't buy this one. I think it's kind of a donkey stock. So that's just my feeling on it. Okay, thoughts on Fastly? Okay, interesting. Fastly, good question. FASLY. Is it FASTLY? Yeah, I'm sorry, FASTLY. Sorry about that. FASTLY. All right. Give you some good. Yeah, there we go. Fastly. FSLY is the symbol. Yep, and it is a edge cloud. I like this. It's in a good sector. Saving security customers applications. Okay, very nice. It's after hours. It's up after hours. This is a really this is awesome. Yeah, this is. I don't know if there's a buy point on this one. This is definitely a watch list stock. No question about it. I like this one. If you want to take a little bit of risk, this one might be the way to go. I definitely think it's in the right category. Now let's look at here. It's in number 1 group. It's moving up. Wow. I think that there are people that are buying this thing. So that's what you want to do. Remember, your goal here is to swim along after that big whale, and you want to look at what they're buying. And definitely a lot of people are buying this one. So this is good. I like this chart pattern. Now, would I buy it right at this moment? No, I would watch this one, and I would wait until it forms a buyable chart pattern. And that is the cup with handle, or the 3-week tight. And if it forms those, it's a buy. But right now it's a watch list. I know that it's very frustrating. You look at this thing going up and you're going, well, wait a minute, if I bought it now, it would go up, and then, I would be so much better off. Well, here's the thing. It's better to wait until a good chart pattern and then buy it at the good chart pattern, because it protects you against a downward motion. And believe me, even the very best stocks can have people shorting them. And when they do, that's what they call a bear trap. And sometimes that's what causes the movement up quickly. So it's better to wait until the good chart pattern appears. When the good chart pattern appears, then you want to be a buyer. Here's the thing about that. That's why it's so important that you start building your watch list. And you build your watch list with things that are going to be that are going to be your best. Are going to be your best. Your best thing. So that's what I want to. That's why I wanted to go over that. Now, let me show you what stocks I'm currently holding, because I think that's only fair. Here I am talking about all these other stocks, and so well, wait a minute, why aren't you showing what you have? And here's what I currently have. Now, for full disclosure, I want to tell you that I got stopped out of a stock today. It was stock I recommended. It was the chip stock that I recommended, Imphy. So I want to show you my current holdings. These are my current holdings as of today. Actually, this morning, I basically am holding Netflix, Tesla, Viva Systems, PayPal, and Microsoft. I know it doesn't sound very exciting, but I have made very good money holding those stocks. So I just wanted to show you that now. All right. So now I want to go back to several other things that I want to show you. Potential stocks that you want to look at potentially to watch list, because these stocks are what they call relative strength at new highs. What this means is this list is stocks that are going to be in a good chart pattern, possibly breaking out in the very, very near future. And this is stocks I kind of want to go. I'm giving you the top 10. And some of these you probably never heard of, like Novum, Inmax. That's a biotech. It's got a 99 relative strength. That means it's outperformed all but 1% of the market. Tremendously strong. This is being acquired by many of the funds. One of the funds being the ETF, the IBB. That's one of the funds that's acquiring this one. I happen to know that. Also, Meridian Biosciences. Do you see it? Do you see a theme here? The theme is, because of the way the market is trading, the funds are moving out of the Dow stocks, the Boeings, and those stocks, and they're moving into a much more defensive play. They're not moving totally into the big cap techs, because they don't believe there's value there. They're moving into the biotechs, the healthcare arena. So that's why you see some of these relative strengths at new high stocks being acquired, and that's why they're very, very good to watch list. So in VIX, Vivo, VIVO, this other one here, and basically down the list. Now, interestingly enough, and this is what you got to see. You got to show the strength of the big cap techs. Guess what? Apple is on the list. So it looks like, and this is incredible, because Apple literally, 6 months ago, Apple was 240. It's now in the 360 range, and it's going higher. Can you believe that? It's going higher. That's what this says. It's going higher. It's got a relative strength of 92. It is up 14 cents a day, which is not a lot, but this is going to be a $400 stock. Do you want some money? Buy Apple or things that have Apple in it. So if you can't buy 100 shares of Apple, I understand. It's getting to be an expensive stock. I mean, to buy 100 shares of Apple, you need $36,000. That's a lot of money. But you can buy the QQQ. and that contains a ton of Apple and other good stuff. So you can get aboard of that. You can get aboard this train, and you don't have to own necessarily Apple, but you can get the benefit of Apple. That's a big deal. Also, Logitech. This is a lesser price stock. I love Logitech. As a matter of fact, the camera that I'm speaking to you on right now on YouTube, Periscope, Twitch, and Facebook is a Logitech camera. So Logitech is really also, it's an old favorite, but it's a good company. It's setting up very nicely. It's probably going to go higher. I don't know if this is a home run stock, and I would watch this. I wouldn't buy this right now, but Logitech with a 92 relative strength. That's very, very good. And that potentially is another one. Another one that I like this one better than Logitech only because I think it has more potential, and that's Splunk. I don't know if you've heard of Splunk, but they're very, very big in the database area. And so they have some excellent big data tools that a lot of people are using. So Splunk is on that list. So I just wanted to kind of go over those relative strengths. Those are really to watch lists. I'm not recommending a buy on those because I think you want to look at and look at the chart really before you go any further on that. I also want to show you what they call the IBD 10. These are the 10 top growth stocks currently as rated by all the metrics that the IBD, the Investor Business Daily, uses, which I use because I believe that they are very, very good. The number one on the list is Palomar Holdings. You probably never heard of them. And we see we go down. Now, I want to show you the third entry on the list. It's one of my all-time favorites. It's NVIDIA. I am looking to possibly acquire 100 shares of NVIDIA, but I won't do it until Monday because I do believe that NVIDIA is setting up very, very nicely for a move higher. I own Vive currently. This has been a tremendous success for me. Also, Fortinet. If you're interested in the computer software security business, you don't think you can get any better than this FTNT. It's a little bit pricey at 134.30, but it's nice. It's down today, $6. Okay, I know that it's down today, but this one, when this turns up, and it's going to probably tomorrow, maybe on Monday, you want to buy this on the uptick. I think it's going to be a winner. Also, again, Adobe. It's very pricey, but excellent. And of course, Netflix. And I own Netflix as well. I don't own AMD. I've never really been able to make a lot of money on AMD, but it's an excellent stock, and maybe you'll be luckier than I am on that. So that's how I am trading it. Okay, so let's go back here. Lilly. Love this stock. Lilly, by the way, there's really two big companies in the world that manufacture insulin, and one of them is Lilly, and the other one is Novo Nordisk. So those two companies, even in this pandemic, are a great way to go because they sort of have look at that. Wow, that's terrific. Very nice call. Thank you very much, Arnold. Appreciate you bringing that to the forefront. It's got a Lilly. This has got to be the best of the pharmas right here. It's at 162.86. It's up $5.83 or 3.7%. This is just phenomenal. It's number one in its group. It doesn't get much better than that. It's got earnings coming out on 7/30. You know what? This is a buy. If you have extra capital, I wholeheartedly recommend Lilly. It's got now let's look at the chart here. I want to show you the chart on Lilly, but I kind of know a little bit about this stock, obviously, and I think it's a quality stock, and I think that even in this pandemic times, you're going to make money. Here's the thing: the trend right now, at least at this point, is that there's a lot of rotation out of the Dow stocks into the healthcare medical field. And so by going with the Lillys of the world, the leaders, you're going to win. This is a very nice chart pattern. Goes from lower left-hand corner to upper right-hand corner. That's the trend that you want to see. That's the trend that you want to see. Also, it's always best to buy a stock on an uptick like it is today. Very strong. My only caveat here is that if you look at this volume bar here, it's a bit below the 50-day moving average, so that there could be a little bit more conviction in this one. But I think you're going to see that it may move down a little bit tomorrow, but I think this is on the way up from here. It's just looking like some really big fish are biting on this one. This looks, this is an example of kind of where the whales are going kind of stock. I think this is a winner, and I think that you could really do very, very well if you were to go with Lilly. But again, watch list it. Make sure, look for the chart pattern. Look to see if it has a uptick. And I think that's a very viable, very, very viable stock. EI Lilly. Okay, Celestion CLSN is in phase 3 of their data before FDA approval. Are you aware of the company? No, but there are so many biotechs. Here's the thing about biotechs. They're hard to buy because they tend to be very binary in terms of the way that they trade. Either they get approved and everything goes great and they go up, or not and they don't. And so an easier way to play this is the IBB. This is an ETF that covers the biotech space. And this really, I normally like to have the individual stock rather than an ETF typically. But in this case, with biotech being so diverse and having so many non-revenue companies, I think that buying the ETF instead of the company sometimes is a better way to make money on a ongoing basis. And this, I'm showing you the chart. This is this is Lilly. I gave you the wrong one. Let me put the IBB in there, because that's there we go. That is the iShares of biotech NASDAQ stock. Okay, look at this chart. It's again going from low to high. You always want to see that. That's your first look. You look to see, are you buying a chart that has the right pattern? This has the right chart. Okay, check one. Is it above the 200-day moving average? Yes, it is. Is it above the 50-day moving average? Yes, it is. What's the relative strength? It's 85. That's excellent. This is a way that you can reduce your risk if you're looking to get into some of the biotech stocks. Well, I have come to the end of an hour here, and I so appreciate everyone coming and looking at me here. And I hopefully tell your friends, as they always say, tell your friends and sign up for my trade alerts. They're free, and you can get them by going to www.Dallas Trading Floor and just fill in the information, and I'll get it right out to you. Now, I will be on tomorrow at 2:30 again, and hopefully I will have sort of a trade of the day for you tomorrow. But I typically will announce it on the show, but I also have the detailed the detail on it typically on my trade alerts, and that's at DallasTradingFloor.com, and just sign up for the trade alerts. Thank you, everyone, for taking a look today, and please tell your friends. And wait, I have one more comment. Oh, thanks. Thank you so very much, Malik. I appreciate you looking, and please like me. And if you're on YouTube, especially like me, really like the ones there. Please like me on that. If you're on TikTok, just go to my profile, hit the link. It goes right to the form where you can sign up for the trade alert. So without much ado, I'll see you back here tomorrow